Hey, what's up guys? This is Taylor with the free video for Wednesday, June 1st. Already June. This year's flying by. But yeah, good to be back guys. Feel like I haven't done a video in a couple of weeks. So as far as the market goes, nothing changes just yet about the bigger picture. But in the short term, a couple of the changes at least worth observing, and being mindful of. So as far as the big picture goes, we'll dive in here. For me, nothing changes about the overall structure of the market. Nothing changes about the path of least resistance being to the downside, as long as we're under that weekly 21 EMA. Now look at a bullish trend pretty much from the same perspective. In a bullish trend, we're going to get these pullbacks to the weekly 21. If you hold up there, though, you're looking for continuation. So that would be the thought process. Any move towards 4,200, 4,250-ish. I still think the weekly squeeze points towards more downside. And if anything, that bounce would make a great short, which we are certainly looking for. So there's the bigger picture, right? That doesn't change just yet. The shorter term, I think, if anything, you have to respect the fact that we've cranked out 3 consecutive closes back above the daily 21 EMA. So let's see, this hasn't happened since... the last time that we got 3 consecutive closes back above the daily 21 was back here in March. Which is interesting because if you look back in March, we'll go from a daily chart to an hourly chart. Even in a bearish trend, especially when we're minus 2 ATR to the downside on the weekly, couple closes back above that 21 does open a door for some decent upside. But one thing you want to take a look at here is if you look at an hourly chart of the SPX, look at your 21 EMA. And if we go all the way back to March, you see March. Alright, so back in March, right? We got the move back above the hourly 21, but then notice how the back test held. So you got your first dip to the hourly 21, you held. Get your second dip, it held. That kind of triggers a continuation to the upside, in the short term. What's been a little bit more of the theme in this market is, they'll flush it, they'll trap the shorts, then they'll run the short squeeze. In the process, they clean up the hourly chart, they get us back above the hourly 21, then they dump it. So basically, you set a bear trap, squeeze the bears, at the same time you're setting a bull trap, you trap the bulls. And that's kind of been the case, right? A little bit of that back here, whole lot of that over here, and pretty much all the way up until, where we are right now, which is kind of screwing around right at that hourly 21. But you could also look at it as 4,100. What's interesting about 4,100, we'll call it the hourly 21, right? You're in the neighborhood. 4,100 also lines up pretty close to the daily 21, and then if you look at the monthly chart, 4,100 is also your monthly 21. So pretty big level here, but that's my short-term thinking. If we can continue to hold above that daily 21, the market's not bullish. We're not shifting the entire structure or trend, but in the short term, I think we could crank a little bit higher. And the game plan would be, all right, if we're going to squeeze the shorts towards 4,200, 4,250, maybe a little bit higher. That's a move I think you want to short into. And we were talking about this in the options room earlier. Scale into the short, like make it painless. Meaning, say we bounce a little bit tomorrow. I could come in and buy next Friday expiration 3,800 puts. If the S&Ps don't roll over immediately, it's going to get pretty painful. If instead I take a half position size on a July expiration call credit spread, that's a pretty forgiving trade. You can scale into it. So a little bit of food for thought there, guys, but 4,100 is a big level. Your hourly, daily, and your monthly 21 all line up in that neighborhood. So keep a close eye on that. And then if you look at the VIX here, in terms of triggering a little bit more upside, I think you want to see VIX back under 25. If we can break through 25 here, then I think you get a bigger flush. We probably see VIX down towards, this minus 2 ATR. That should, if it happens, that should give the S&Ps and the rest of the market little bit of a green light here. So things to watch, and then as far as a few setups, I know y'all like your setups, as do I. You know, as far as the upside goes, I mean, nothing has changed. It's the same names we've been covering since, you know, February or March. So one group is definitely energy. And energy still looks poised for more upside. It's firing a daily squeeze. But then you've got... Ooh, alright. Now you have the 3-day squeeze firing long as of this week. So I do think that gets you... Yeah, it might get you through 90 plus. Look at it from this perspective. A squeeze fires. There's the potential for 5 to, 8 to 10 bars of momentum. If it's a 3-day chart, that's a pretty good push. So I still think energy is a buy on the dip. Then names like a Valero, just rock solid. I've had my buy signal since early March. So when you have that kind of overall daily structure, then I think you can look for something like... I'm trying to find a squeeze here. She ain't squeezing. Well, no squeezes on Valero. You can get a 15-minute and a 5-minute. The point I'm trying to make is when we're looking to play something to the upside, start with your daily chart. What you're going to find is something above that daily 21 with a positive histogram, positively stacked EMAs. With that kind of daily structure, that makes for some pretty good shorter-term trades off of a 30-minute chart or an hourly chart. And speaking of the stacked EMAs label, if you guys don't have the daily or the weekly label, we'll put in the description of this video, we'll put a link for my newsletter. If you sign up for the free newsletter, we will send you the stacked DMAs label for the weekly and the daily. So we'll hook you up with that if you don't have it yet. And that is a big piece of my puzzle. And actually, the stacked DMAs play a role in these buy and these sell signals we've been working on. But anyways, energy looks good, so your Valeros, your Devons, your EOGs. Not saying this is where I want to get long, but for now, BTFD. Then you've got natural gas, another one we've covered a few times here. This has had the buy signal since first week of March. So brand new daily squeeze, holds that daily 21 like a champ. And now you're looking for some more squeezes. We've got a 4-hour. Let's see what we got here, guys. Alright, 4-hour. Is that it? It's not a bad combo, don't get me wrong. Alright, 15-minute squeeze, 4-hour squeeze, and a daily. But a nice looking trend. So I think if that holds at daily 21, we've been looking for Larry Bird. 33. That's been the target in the options room. We did hit Magic Johnson last week with the push into 32, but now we're looking for the big bird. So UNG, energy, US oil, still cranking. So I think you can buy a dip in US oil, and then last but not least, I think a few of these utility stocks in the XLU basket, looking pretty primo. So I got my buy signal here on the utilities as of a few days ago. We got the stacked DMAs, we got the histogram shifting in the favor of the bulls in a squeeze. So a few different picks here, guys. You got, let me see, which ones do I show you? Well, I like SO. Pretty solid. Got the buy signals. I like AEP. Same setup, right? But good structure. So SO, AEP. I like XEL. I like Dominion. So a few picks for you there. Energy, natural gas, US oil, the utilities, and then otherwise, again, in the short term, right? The short term, I think it's just a question of do we hold or fold at 4,100. If we hold above 4,100, I think we could get up a little bit closer towards that weekly 21. We start closing back under the daily 21. Then I think we're on our way towards a new low. So, try to be a little bit balanced here. Between a few different rooms over here, it's simpler. I've got long positions in XEL. I got a long position in Dominion. We've got shorts in TXN. We've got shorts in Wells Fargo. And then we got a cheap call debit spread here on the S&Ps, just in case we do break out and push towards 420 this week. But we're balanced, right? We're long a few things in good-looking trends, and then we're short a few things that should pay us pretty well when and if the S&Ps throw in the towel and make a new low. But that's all I got for now, guys. If you found this helpful, go on ahead and subscribe if you're not already, and I look forward to talking with you in the next one. What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.